You're watching today's video technical update presented by FXTimes. It is Friday, May 28th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. Today, I'll take a look at some Japanese yen crosses. The yen has been gaining across the board except against the US dollar, which also has been benefiting from the flight to safe haven. Commodity currencies, however, have not fared well. This week, the market stabilized a bit. We can expect some further consolidation, but I have a bias for continuation after. So let's take a look at what the market is showing us. This video is being produced at about 3:15 p.m. near the close of this week's trading. Here's a look at the pound-yen pair 4-hour time frame, which I've been stalking this whole week. And if you remember, earlier this week we had this start of another correction after this first pattern, and it's better to look at it in the 1-hour time frame. We saw here this sort of triangle or wedge completed, and then there was this X wave that connects two correction patterns, and here we have another one. Probably a better count would be A, the X should be B, and we are at C at the moment. Here's just to make it more clear, A, B, and C pattern, where the C could be a 5-wave impulse wave, or impulse type of wave. And if that's what's materializing, we may be looking at 1, 2, 3, and 4, only if this fourth wave does not break below 130.50. So if the market bottoms here, another rally could go to 133.90 if this wave 5 is the equality of wave 1. So here's the projection for the coming week, coming out of the gates next week. This is one scenario. However, the market breaks this. Here you see a cluster of support that the market is testing. If the market breaks this, then we have possibly already completed our C pattern, and a continuation may result from that. But of course, you have to test this 128 area. So if you are you have an outlook to continue this decline. For example, looking at the 4-hour time frame, you see this wave here. Let me just project this wave further down. So this could be our projection towards the 121 area starting next week. Okay, but of course, this is an area at 128 to change your outlook if needed. Hey, so just one last thing, 15-minute time frame, we see the market. Okay, so back to 1-hour time frame, we see this dip, and the market's supported here. At the moment, this consolidation here is a triangle, possibly A, B, C, D, E, and then one more wave down before we could have a rally, which would go with this scenario. All right, so that's the plan for that's the plan for the start of next week. So continue to watch this area at 131 area. Before moving on to the euro-yen pair, here's another look at the pound-yen pair. So this is at the moment a possible scenario. You see 1, 2, 3, 4, 5. However, you have to keep in mind that there's a negative reversal that is forming, and after resolving this cycle high, whether there's another wave or not, there could be a projection as such, either this way or this way. I'm tempted to almost project it this way, but just to be conservative, using the shorter projection may be more appropriate. So here's the two scenarios starting next week. A rally to end with wave 5 before continuation, bearish continuation. So moving on to the euro-yen pair, which is in a similar situation. Here's a 4-hour time frame, and you see how there's also a similar reversal here, also here, but again, using the more conservative approach, we'll do this projection from here. But of course, you always want to check your outlook when this market check or test the 109 area. Okay, so now back to the 1 hour time frame. Same thing, we may have another rally. See, 1 2 3 4 5, or this wave looks like it could have been wave 5 could have been finished already, which makes me think in the 4 hour, in the pound yen, a similar dynamic is probably resolved. So again, not very clear at the moment. Watch for this support area, just like in the pound yen, to start next week to see if there's another rally before a continuation decline. I'm not going to spend too much time on the Aussie yen or Canadian dollar yen. And as you can see, all these yen crosses have the similar dynamic where in the past 2 weeks we have consolidation, and this week we may have the C wave of this consolidation. So this might be A, B, C. There's a zigzag. Now this C could have another wave up, just like the pound yen, right? 8, 1, 2, 3, 4, and this could be a 5 before we continue the decline. So pretty much same situation. Look for the market to have another rally and look for topping here near the 78.50, also testing this declining trend line. Okay, again, this also develops a negative reversal. Okay, you could use it this way or maybe this way, so it depends on if you could use this wave to project it, or if you're just to be more conservative, you may want to start using this wave and seeing if there's any changes in outlook here. Okay, so here's the two projections for Aussie yen, similar to the other yen pairs. Canadian dollar yen, again, almost the same picture here. Although you see the Aussie yen here decline further than the previous low, so the Aussie is more pressured than the Canadian dollar pair. Okay, so here you may, if there's decline, you may expect it to not, you may expect this support to hold more likely than Aussie's support here holding. Okay, so that's the Canadian dollar yen, similar situation as the Aussie yen, but the Canadian dollar is stronger. I haven't discussed the Swiss franc pair currency a lot, but it is one of the weakest currency at the moment. Here you have this slide against the Japanese yen in the daily. You see the daily, for a while it's been consolidating or in sideways action much of 2009, and then in 2010 we started to have some more volatility on the downside, and now this market came almost testing this previous low, just above 74, around 75 area. So I think the market wants to make another attempt to test this low, but at the moment it's supported here at about the 76.80 area. You see this is also the 150, 161.8% retracement of this rally, so there's some support here, definitely. As the market resolves its oversold conditions, we'll see if it wants to continue this decline. Looking at the 4 hour time frame, well, candlestick action itself tells us that there might be some further correction, and we could see this correction come up to test this previous low here at the 81.80 area, and that would be a pullback. And that pullback, if market tops off here, that could confirm a further bearish attempt. Looking at the 4 hour time frame, at the moment, there's already a negative reversal developing, just like the other yen crosses as you've seen, and the projection here would go to 73.50 area. But we know in the daily, that's an important low right here. Let's see, right here, around the 75 area is already at low. So the market may not reach all the way to this projection. Instead, look for some bottoming even above that. Okay, but at the moment, it's testing this 50 moving average, breaking a little bit, see if there could be a slingshot for further rally. If not, then this decline should materialize. But so this is a short-term, intermediate-term move. But in the very near term, looking at the 1 hour time frame, we're still testing this rising support as well as this previous high here. If the market does not break below this 78 like 40 area, then we could have another rally. But at the moment, you see this important cluster of support here. The market is testing that. You see here it's 61.8, here it's 38.2. So important support. Again, watch this area going into next week, see if there's a rally, or if there's a break below that, then we may have continuation, bearish continuation towards 75. That wraps it up for this week. Visit FXTimes.com for more analysis updates and live events. There won't be a video Monday because it's Memorial Day, but I will be back on Tuesday. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you a great weekend.